Hey everyone, welcome back to Inkmattic, back here with another video. This is episode 77, and today we're going to be taking a look at the portfolio, the Trading 212 portfolio. We're also going to be taking a look at some other stocks, but let's dive into the portfolio, just the Trading 212. I do want to cover, just show you my dividend growth on the Trading 212 ISA. So let's have a look. So what I'm going to do here is just pick the Trading 212 ISA and just wait for it to load. I'll be back in a second. Okay, so this is the Trading 212 ISA dashboard that I have. At the moment, you can see that I've got 26 individual holdings, and my top 5 positions in this portfolio are Energy Transfer, which makes up 21.4% of my portfolio, followed by Main Street with 17.5%, Realty Income 7.4%, National Grid 5.7%, and then Boeing, which makes up 5%. In terms of looking at these sectors of investment, I'm very heavily invested in energy transfer, property, and internet, which are my top 3 sectors. And then in terms of currency, so this is basically the market that I've invested in, and 70% of my portfolio is in US stocks, followed by 24% in UK stocks, and then the rest, which only makes up around 5% in European stocks. So I think this is something that I do need to increase in terms of my exposure. I do want to start investing a little bit into maybe the Japanese market, but I need to figure out which platform that's going to be suitable for. But yeah, this is just basically just a top-down view of my portfolio based on the Trading 212 ISA. And if we do look at the week's performance, I am up 0.2%, and this is including dividends, etc. So, you know, it's kind of remained roughly around the same since the 16th to the 21st. But we can see here that we have seen a little dip in the MLPs investment category this week. So it's down about 2.6%. But the growth stocks have actually been doing really well, and they are up 2%. REITs have been doing pretty well, up 0.9%. So yeah, I'm pretty happy with that. But what I do want to dive into today is the dividend growth. So with the dividend growth, you can see that in 2019, I did start investing in this account anyway, in September of 2019. So you can see that I did earn £6 dividend for 2019. So when we look at 2020, the year of the lockdown, I did earn about £200 in dividends from my ISA account. And we are not even halfway through, and I've already exceeded the dividends that I've received from 2020, which is amazing. I am at £240 just from this account, which is awesome. So yeah, the growth I think is going pretty well, and I think as long as I keep continuing to add what I am, I should see this continue. I would see the growth rate drop a little bit, because 2020 was kind of like an anomaly year. But if we look on the monthly dividends, you can see that May so far, it has been my largest dividend month to date, at £97.19. Okay, so when we do look at the annual dividends, and each of these bars are for the previous 12 months. So as you can see here, that, you know, it did start off pretty low in terms of dividends, but then it has been rising, and you can see that there is a big leap here in May. So the previous 12 months in April was around £325 in dividends, whereas this year, including May 2020 and the previous 11 months, I guess, it's £420. So I'm pretty happy with that, and you know, there is still a few more dividends to come for this month. So I should see this to get to around 440, maybe 450. But I will provide an update next week on that. So yeah, I think I'm pretty happy with the dividend growth in terms of this, and it is definitely seeing, at least I know my portfolio is growing naturally, so that is good to see. So let's dive into some of the news this week. So I've been looking at AT&T, and it's quite an interesting one with AT&T because they are looking to spin off their media company into a Warner Media Discovery deal. And I don't think it's a good idea for AT&T to spin off their media company. And this is because I do think that with AT&T, in terms of telecoms, they are actually pretty restricted to, I guess, geographically. But when you do have a media company as well, you can definitely see exponential growth and expand it into several different markets, which I think they're missing an opportunity here by spinning it off. But another thing as well, they have actually announced like a 50% dividend cut. But it was kind of interesting the way they announced it, which was kind of sneaky, I think, in my opinion. But I'd love to know what you guys think about AT&T. Do you think, if you do have it in your portfolio, would you be keeping it in your portfolio, or would you be selling it off? I'd love to know what you guys think about it, and if you will be holding on to it, because it is kind of an interesting one in my opinion. I think they could have done better to announce it and be a bit more honest to shareholders. But I guess they're going to lose their dividend aristocrat. So yeah, for me, I'm glad I sold out of it a long time ago because wasn't something that I wanted to hold. But yeah, they did have a nice dividend yield, but I guess the dividend yield is halved now, so it's probably average now. But in terms of growth, I'm struggling to see where they can actually grow from, in my opinion. In terms of what their prices are, so if we look at the last week, they are down around 7.32% on the week. But in terms of the analysis rating, there are two analysts that have recently updated their ratings, and that's New Street Research, and the price target is at $35. They don't have a previous rating according to Stake, so that is a new rating. But however, UBS interestingly have increased their price target from $32 to $35, and it also remains as a buy. So that is an interesting one to see. I personally think the share price is probably going to drop a little bit further, maybe to $28 or maybe even to $27. Just my opinion, my own personal opinion. Obviously, don't take this as financial advice. But yeah, that's just my opinion on that. In terms of the portfolio, it is at £16,338. I've invested £13,377.85. Returns at the moment is £3,261. That's 24.38% on the week. I have kind of roughly remained the same, 16,450 to 16,638. So I have added a little bit to this, and I've also received a number of dividends, which has pushed this overall number up a little bit. So yeah, in terms of what's been going on this week, so I've made a few buys this week. I've purchased some more of Apple, and I've got this to a total of 7 shares. With Apple, I have actually received a dividend from them. I received ATP. So, every little helps here. I'm pretty happy with that. And I have purchased, I'm up to 7 shares now. So I am getting closest to that 10 shares that I did say I did wanted to buy. So we are getting there slowly, which is good. All right. So the next one is Disney that I've purchased. I've just added a small fraction to this, and there was just some change that was left over. So now I've got roughly around 3.31 shares in all Disney. I am up 1.08%, and my average price is at $164.14. So I still strongly believe that Walt Disney is going to see some good bounce back when the parks are fully reopened and the social distancing is kind of put to a minimum. I do think Walt Disney is going to see some huge gains in this, and this is just my opinion. I do want to try and get to as many shares or as many fractions of a share that I can get to with Disney. Next position that I've added to, which is Legal & General. So with Legal & General, I've purchased 10 additional shares with this at a slightly higher price than what my average is. I think I paid around just probably £1 more than my average price, but I still do think it's a good price overall. I've got 130 shares in this now, which with an average price of £1.82. I'm up 53.71%, so I still think this is a pretty decent stock in my opinion. So with Aviva, it is doing pretty well. On the week, it is down 1.66%, but I'm still doing pretty good. I'm up around 63.31%. Average price is at £2.46, and in terms of dividend that I received £23.80 in dividends, which then I used to reinvest into Legal & General. Moving on to the next dividend payer, and it's a monthly one. You know, they always make an appearance, which is Main Street Capital. So with these guys, I'm up around 1.16% in the week, and I've got 100 shares and I'm up 13.97%, which is around £355. I did get a £12.27 dividend, so I'm pretty happy with that. And yeah, that went into some of Apple. Realty as well, I did receive a dividend from these guys, and it was only around £3.65. I do want to try and get this to around 30 shares, but I just need this to go down to closer to 60, to be honest. I do have 26 shares at the moment. I'm at £44.55. That's 3.78% in the green. We all know Energy Transfer. So Energy Transfer paid my dividend, or Trading 212 paid my dividend this on Friday, and I think they paid it on a Wednesday. So I received 15 cents per share on this, and it's not really called a dividend, it's called a return of capital. And so with that, I received £53.91, which is actually really good. I'm really happy with that. I am up 37.74%. That's £989.72. So yeah, I'm pretty happy with that. And yeah, I didn't reinvest that dividend into Energy Transfer. I put that money basically split between Apple and Disney, were my two main drivers for this week in terms of trying to increase my position in that, because I'm pretty bullish on those two companies, and I think, you know, they are going to do pretty well over the next 12 months. That's just my opinion. But yeah, I hope you enjoyed it. Don't forget to like, comment and subscribe to this video. But yeah, that's it for this episode. Let me know in the comments down below what you guys think, and what are your buys over the next few months. Is there any particular stocks that you are looking at? I know I did say I wanted to increase or open a new position in a new ETF, but I didn't get a chance to do my research this week. So unfortunately, that's going to be for next week. And you know what? End of the month is payday, so I will definitely be opening a new position in an ETF. Definitely, and I'll share that with you. But don't forget to comment on your ETFs. I know some of you have, and they are on my list to review next week. So that's it for this video. And if you do want to sign up to any of the platforms, links are in the description. And I do have two new blog posts coming out on Inkmattic.com. The first one is a stock advisor by the Motley Fool, and if you're interested, keep your eyes out on Inkmattic.com. And the second one is an 𝐅𝐫𝐞𝐞 written review. So yeah, let me know in the comments down below what kind of blog posts would you like to see, or videos. But yeah, see you in the next one.